Hello and welcome to Livewire Markets. My name is Chris Conway. Today I'm sitting down with Peter Edwards. Peter is the Executive Chair and Co-Chief Investment Officer of the Victus Morgan Group. He's going to be talking to us about how the group invests. Peter, thanks for sitting down with Livewire today.
Thank you. It's a great opportunity.
Just talk to me, Peter, what makes Victus Morgan Group's strategy different from a traditional fund manager?
We think about it as an open mandate, being thematically led first, company-led second, and I guess given our positioning as a family business, it allows us to take that view and be agnostic as to where the opportunities lie within the listed space. Often people can't invest in the Swedish market or the Japanese market given the mandates of funds, and I think that's where we gain an advantage by not having those limits.
So just to pull on that thread, how does being a family office, apart from what you just said there, how does it allow you to be more flexible and more opportunistic?
I guess if we take an operator mindset, an operator will go where the profit is, not be limited by, I guess artificial or self-imposed limitations. From our own perspective, when we start, our performance from developing a theme has kind of been 60% of our return. And then our activation by individual company has been about 40% of the return. And probably that's the difference. Whether it's taking a longer mindset because you're a private company, whether it's, I guess, being able to ride the positives and negatives through the individual months to get the yearly outcome and not have the normal pressures of
reporting and things like that.
Well, I guess you still have it, but we look at it as our money, and what do we want to do with our money, and how have we been successful in the past, and how do we then overlay those behaviours into a listed space? And I think that everyone tries to do that. I don't think we're particularly special. We just have a particular slant on it.
Yep. Can you give me an example, Peter, of how flexibility or one of the investments that you've made that leverages that?
Well, I talk about the largest position. I think still the largest position in our fund is Hitachi. Hitachi literally is on the Japanese exchange. It would be outside of most people's mandates, but it drives very squarely into the thematic of decarbonisation, electrification, AI. Even nuclear, if you take it that far, they bought Westinghouse's nuclear business. So they're a business that's been consistently increasing sales and consistently increasing their margin by transitioning their business. And in terms of liquidity, it's a very good place to be, because if you don't want to be there, you can get out quite quickly. But just, I guess, our methodology is, if that's where the opportunity is, that's where we have to go.
Peter, just talk me through both the process and the asset allocation and how it's changed over time for Victus Morgan Group.
Okay, well, our process is a thematically led process where we talk about the opportunity across the group in different asset classes. It may be equity, private equities, debt. In any of those activities, you're still chasing a particular theme. We can, if the theme is consumer discretionary, you can run it as an operator. You can invest in great companies in the markets, or you can invest with fund managers that are active in those areas. That's probably more the question of our process. So when we think about asset allocation, we think about it as an allocation per theme, and then a question of activate, the best place to activate that theme. Where we are in terms of the strategy of our themes at the moment, I dare say it generally doesn't change all that much. Gold obviously was something that the group had gotten quite large in, gold and commodities. Property for us, as both Australian property and probably more pointedly US property, we're seeing lots of opportunities in, and that's a large part of our allocations. Corporate debt, again, depending on theme, and obviously equities, within all of that. So again, themes would be gold, they would be decarbonisation, they would be electrification, they would be emerging markets, capital markets, and that's particularly within the GMF. And then outside of that would be equities, corporate debt, property, and property in all its different forms in terms of build to sell, build to rent.
One thing I did want to ask, Peter, and it just came to my mind as you were talking through some of those themes. Some of them are relatively recent in terms of electrification and decarbonisation. You know, there's so many themes that an investor could choose from at any moment in time. How do you determine the 5 or 10, it seems, that you want to pursue? Is it a matter of that's where the capital is flowing? Or do you try and be forward-looking and think this is going to evolve?
It's probably where we then lean back on a sort of a history of operator mindset, because I would say that we choose by supply and demand.
Right.
You know, what is in demand and what is limited in supply.
Yeah.
We're probably more comfortable with investing in areas where there is current demand and undersupply. I think there's great opportunities to invest in things that have growth, you know, and have amazing products and the ability to actually increase their sales, you know, based on creating demand, but we're probably more on the other side of the coin.
Yeah. Are there any limitations on the other side of the coin, Peter, in terms of running a family office strategy?
I wouldn't say they're limitations, but there's stakeholder expectation. Right. And the ability to keep any business together is to satisfy your stakeholders. Sometimes, you know, that involves compromise. And again, you know, that's probably the balance of running a family business versus a corporate entity. Yeah. Is not so much in portfolio, but, you know, you talk about challenges, my mind goes to a million different things.
Sure. Well, in terms of delivering for your stakeholders, it seems like you've done a pretty good job so far, 13.8% annualized since inception. So first of all, well done on that. But what do you put that down to? I mean, you've had less drawdown than the major indices, so protected on the downside, obviously delivered upside in a suitable fashion, shall we say. Yeah. What's driven that?
To us, I think it's a concentration on multiples and free cash flow opportunities within the portfolios.
So portfolio discipline.
Definitely portfolio discipline. Yeah. But also within a thematic, choosing, if you like, the free cash flow, low multiple companies within that thematic versus the high growth, right, high multiples, I think has given us a consistent return. Yeah. As opposed to necessarily, you know, the highs and lows of in automation, for example, it's Hitachi versus NVIDIA. Right. You know, we'd rather, not that we wouldn't rather be in NVIDIA, sure. But in terms of an industrial business that has a 3-year, and again, I know I'm describing NVIDIA anyway, yeah. But we, I guess, had perceived them differently around market multiples and ultimate risk.
Yeah. Peter, fascinating, well done, and thank you for sitting down with Livewire.
Thank you.
If you enjoyed that interview as much as I did, make sure to give it a like, and don't forget to follow our YouTube channel. We're adding lots of great content every single week.